Thank you for letting me know that. So I'll just start over. Basically, what I was saying was that today we were really only expecting to shift sideways, to trade sideways, not really to get super directional. We got the CPI and PPI coming up. CPI tomorrow morning before the market opens, PPI the morning after, and then we also have the presidential debates tonight. So we have some major catalysts coming up. And before that, we don't really expect a huge amount of movement. We were talking about how we are butting up against some pretty heavy resistance right here. And that proved to be strong this morning. We did not make it above any of these moving averages, and we just started to trade downwards. We opened right near them and basically just started trading down almost after 15, 20 minutes into the session. So let's take a look at that. It was maybe 30 minutes into the session. So you can see that we sort of chopped sideways and then we broke down. Now we have this downward bias in the market and we came and touched the VWAP and now we're starting to head lower. So how low can we go? Probably we're not expecting a huge range movement today. So 544 is possible. 542 and a half, 542, that's possible. I wouldn't really expect it to move much more than that. We don't have a directional bias. So in this instance, we still, if your portfolio is pointed bearishly, then this is good for you today. But don't expect it to be amazing and have all your positions hit your targets today. We are still in a somewhat precarious position because the catalysts that we have coming up, they do have the potential to push the market in either direction. So they are strong enough that we could possibly break through this cluster of moving averages. And if we got that, then this market kind of looks bullish. So we bounce off of a low. We have a lower high, but pretty close to a same high. Then it would have bounced off of a much higher low, and that would look pretty bullish. It's just that we have that resistance right here. So we don't want our portfolios to be fully bearish. We don't want 100% bearish unless we are completely below that MA200. We just want to be pointed a little bit bearish because there is more potential for downside than there is to the upside, but we don't want to be caught completely off guard if this does actually manage to break through that cluster right there. So let's take a look at our volatility, and let's take a look at our sectors, and let's take a quick look at our momentum and see if those are giving us any clues. But really, our expectation is just a chop sideways today, and then we'll figure out, because the catalyst tonight, the presidential debate and the CPI tomorrow, those could basically wipe out any of the conclusions that we make at the moment. So we just want to be careful, but it is still good to go through the exercise and just to have a preparation, see if there's anything significant enough that it would tilt the odds beyond 50-50. If I look at the VIX did start to come down below 20, but I wouldn't say that would be calming for the markets unless we start to get towards 17, certainly below 15, but I don't expect that we're going to get below 15 probably all the way until the election. So this is probably the new normal for this time period. Just there's elevated uncertainty going into an election cycle. So this being at around 20, just below 20, we would really want to see it closer to 17, maybe 17 and a half before we would say that. Maybe we have some calm inside of the market right now. So that does slightly favor the bearish side at the moment. Let's take a look at a broader picture. And you can see here, if we don't make it above that MA50, then this could easily curve downwards and start to drag these numbers. These numbers are still pretty healthy. 64% above the MA50, almost 70% above their MA200. But if we start moving away from that MA50, this number will start dropping pretty quickly. Our CPC is not really indicating anything, and we just went over the VIX. So we can take a look at our sectors. And that was interesting. Looks like we may have hit a target on NEE. So nice little bounce in NEE today. I'll double check that in a little bit. And our sectors, let me turn these back on. It gets a little messy, but it's okay. Okay, and we can see that XLE is leading on the way down. XLE is really not doing well at the moment. That is sort of recessionary expectations. Nothing else would really take that down. And it looks like we broke below that box. So this market is, just from that one indicator, is starting to look like it is pricing in the possibility of recession. And that's going to be exacerbated by if a Fed cuts rates and that uninversion happens, then the expectation, well, actually the uninversion already started, but if we cut rates, that we make it worse, we steepen that curve. So that would start to kick off even more fear of recession. And that's another reason why, if this Fed does cut rates as expected, there's just not a lot of upside because everything is priced in. Literally 100% is priced in of some sort of rate cut. A 50 basis point rate cut might temporarily offset some recessionary fears, but again, that steepens the curve even worse. So unfortunately, the Fed has kind of backed itself into almost a no-win situation where no matter what they do, the upside is extremely limited and the downside seems to be pretty vast. So far, this XLE is not inspiring confidence that we're going to be able to get through this with a soft landing, as a lot of people were expecting over the last few months. Hey, they successfully navigated a soft landing, and right now it's looking less and less like that is actually the case. Let's see what else is moving. To the downside, we got financials. Okay, SMH was leading on the way down at the open, but looks like we're getting closer to the middle, which is good news for the QQQ. And on the way up, we've got utilities, bonds, and staples. No surprises, right? They've been the ones that have been leading on most days for the past few weeks, maybe 2 weeks now, maybe 3. So yesterday in the post-market review, we're talking about how staples and utilities were really the ones where you really want to stick to if you're looking for positions to the upside. And this is really playing itself out because with the market in defense mode and with a higher risk to the downside, the only sectors that can really survive that well are XLU and XLP. They'll do well in any scenario, whether it's the debate, CPI, PPI. If it goes up, it goes down. The only thing that hurts it, or actually, there's 2 things that will hurt it. If suddenly everything is rosy and everyone rushes back into the tech sector, or if things are so bad that people don't even want stocks, they're going into bonds and gold and alternative assets that are much safer and much more stable. So those are the only 2 scenarios that hurt XLU, XLP. And we want to stack those odds in our favor. So I don't think we'll get to either extreme, at least not anytime soon. And so XLU, XLP are really good candidates for our money. So XLU, nice little bounce off of the EMA 8. Looks like it could challenge and make a new high in the next week. XLP already doing it, already making a new high today. So all-time high in XLP. So that's really where we want to focus our attention to the long side. And If we look at our XL, let's see, XLE is a possibility. And let's take a quick look at tech, see how that's doing. XLK made it above its MA50 right now. And above its VWAP. So maybe some glimmer of hope for XLK. So to the downside, it's not as strong of a candidate as it used to be. Let's look at SMH. SMH is still just hugging that MA200. So if that breaks below the MA200, then SMH would be the one to watch to the downside. Okay, let's take a quick look at 90-day highs and lows. 137 90-day lows, 71 90-day highs. So that's chopped sideways. That's to be expected. We're really not expecting the market to move a whole lot today, as we started out saying, so I won't repeat it. So take the opportunity to hedge yourself either to the upside or downside if you need to, or rebalance yourself, because the debate and the CPI numbers could really change the picture. So that's it for this morning. I will see you in the post-market review. See you guys.